Hello and welcome everybody. Welcome to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas, with chapters all over Texas, 150,000 members, participants, and attendees going all the way back to 2003. They say if you have the slightest interest in real estate, the first thing to do is go join your local real estate investor association, because real estate is local and laws are local and resources are local. And by the way, for you guys live, we are live and we're also simulcasting online. For you guys online, hello. For you guys live, we do have some food over there in the back if you want to get yourself something to eat. There's plenty of food. There's some drinks in the back as well. So please help yourself. And there's no hurry to do that, but it's there whenever you want. There's plenty of food actually. So one of the things that the Texas REIAs provides to its members is market data, because real estate investors need to be a student of the market. The market is always changing and you need to know what's going on. So we're going to tell you with some market data what's going on in the market right now. This is the Texas Roundup. The average price house in the state of Texas is $427,000. It's actually up a little bit, 3% from 1 year ago. The median price in the state of Texas is $340,000, up 1% from 1 year ago. But if you really want to know what's going on, and you just want to look at one data point, I would say this is the data point to look at: months of inventory. What is months of inventory? That's the most single-pointed, barometer of how the market's doing. The way to describe months of inventory is this: if you took all the houses for sale in the MLS and you stopped adding any more houses for sale, so we're not going to add any more, we're going to just take what we have in the MLS for sale and we're going to sell them until they're gone, until there's none left. How long would that last? How long before the last house gets sold, before the shelves are empty? And the answer is 4.8 months. Okay, that's the answer, which is also the average amount of time to sell one house. Now that's average. Some houses take a lot longer, some houses take a lot less, right? That's why they call it the average, 4.8 months. Now let me put that into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. So what kind of market are we in, guys? We're actually in a seller's market, and we have been in a seller's market for several years now. We never even got close to a buyer's market, okay? And there's some reasons for that, and I'll explain the reasons in a minute. Now, a year ago, we had 3.6 months of inventory. I would call that a pretty hot seller's market. I would call 4.8 months of inventory a lukewarm seller's market, but it's still a seller's market. So what's the history? Well, in 2021, prices went up 18% in 1 year. In 2022, prices went up another 10.7% in 1 year. And then in 2023, they flattened out. In 2024, flat. Until at the end of the year, they went up a little bit. Why did they go up a little bit? What happened at the end of 2024? Interest rates came down a little bit, prices went up a little bit, but not much. And that's basically where we are. So what affects prices? Two things: supply and demand. Supply and demand. And we'll talk about supply and demand. Now, I will say this: interest rates is probably the biggest story in real estate over the last several years. Interest rates went up. When interest rates went up, what happens to home prices when interest rates go up? What do you think, guys? Do they go up or do they go down? Go down. Well, sort of. I mean, for sure, when interest rates go up, houses are less affordable. When houses are less affordable, less can afford them, right? So the number of buyers goes down, so demand goes down, and that pushes prices down. But it's not just demand, it's also supply, because something else has happened on the supply side. what happened on the supply side. Normally, 2/3 of houses that are sold are resale, 1/3 are new construction. Right now it's inverted. Why is it inverted? Why aren't people selling their homes? Because they got a 3% mortgage and they don't want to give it up. Yeah. So all of that supply is being held off the market. And when you have less supply, what does that do to home prices? Pushes them up. We have another problem, right? Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And there's another 10 million people we don't know where they went, but a bunch of them are here too. And they all need a place to live. And it's either going to be a house or it's going to be an apartment. Apartments are full and there's not enough houses. And when you have a shortage of houses, what does that do to prices? Pushes up. So yeah, we got less demand, but we also have less supply. And when you have less demand and you have less supply, what happens to prices? They cancel each other out. That's why we never had a correction, right? A substantial correction. Okay. What's going on in the marketplace? Let's talk about some of the market drivers. And by the way, all of this data is from the Texas A&M School of Real Estate and a number of online resources. We're not here to try to persuade you of something, to try to sell you some idea. There are groups and organizations out there that are always trying to persuade you the market's doing this or the market's doing that. We're going to tell you what the market is doing. And if the market's going up, we're going to tell you it's going up. If it's going down, we're going to tell you it's going down, because we can make money either way, right? But you do want to be a student of the market. So what's going on in the market? Well, let's talk about the economy. Economy, not bad. Consumer confidence is not bad, not good. It's kind of in the middle, okay, yellow. Unemployment, solid unemployment. We have great employment here in Texas. Job growth, solid here in Texas. So we got good job growth. Stock market, not bad. Went down a little bit, came back. And the stock market doesn't directly affect real estate other than when people look at their 401k. If they have more money, if they're making money in their 401k, they feel wealthier, right? So they're a little more likely to buy real estate. Business growth, good in Texas. So overall, the economy is not bad. What else? Affordability, interest rates. Interest rates are up, right? There's a red one pushing prices down. House price trajectory, flat, right? Not up, not down, that's flat. Supply, active listings, flat. Months of inventory, low. We're still in a seller's market, low. Housing permits, we got a problem. We're not building enough houses. And people keep moving here and they keep having babies. So we need more houses. And this is another problem, construction labor growth. Let's talk about that. Contractors are dying. It's a problem. The average general contractor is 58 years old, and they keep getting older. And young people are not becoming contractors. So if you have a teenager, let me give you some advice. Don't send them to college. Buy them a hammer. Seriously. I know plumbers that are pulling down 7 figures, guys. Plumbers are making $1 million a year. You go to get a degree studying some stupid thing you're never going to use. You're going to get a $65,000 a year job. You're going to have $250,000 worth of student debt, and you're going to work for a jerk. Or you can make $1 million a year as a plumber. Now, I got to tell you, I went to college, and my parents went to college, and now I'm a parent, and I have a 16-year-old boy, and I want the world for him. I don't really care if he goes to college, okay? Because I think college teaches people to work for other people, but that's a whole nother conversation. But the problem is we don't have enough contractors, right? And because of that, we're also having trouble building houses and keeping up with the demand. And then finally, housing demand, closed sales flat, pending sales flat, but the migration is the big one, right? And this should be a triple size bullet, right? The migration is the ratio of people moving in versus people moving out. We have a huge influx here in Texas. And again, they all need a place to live, and it's going to be a house or it's going to be an apartment. And we don't have enough houses. We have a national housing shortage. We have 6 million fewer houses than we need. So those are all things pushing prices up, even though interest rates push prices down. So that's the data. Let's do a poll of the audience. I'm just curious, what is your opinion? Who thinks, based on all the data, prices are probably going to go up this year? Who thinks prices are probably going to go up this year? Who thinks prices are probably going to go down this year? Okay, got some ups, some downs, some I don't know. Okay, I'll give you our forecast. Our forecast is not much is going to happen. If you're waiting for some big correction, that was probably it, and there wasn't much there. We do expect a little bit of interest rate drop this year. Right? That's what most of the experts are telling us. Probably a couple times. That'll drop the interest rates a little bit, which will boost the market a little bit, but not much. We expect prices will probably be up about 2% this year, not much. And sales volume will probably be up about 2% this year, not much. There's just not much big things, shy of some kind of a nuclear war or something, that is likely to change this by a whole lot.